Relations between US and China seesaw after announcing 100% tariff on China on Friday. President Donald Trump now says trade relations with China will all be fine and that America wants to help China and not hurt it. US futures rebound from Friday's rout after Trump assures good ties with China. Asian markets open lower. The gift nifty is indicating a lower start for the Indian market. Crude oil prices rebound as market sentiment improved after US President Donald Trump struck a conciliatory tone towards China 2 days after threatening now on terms of tariffs. Gold trades above $4,000 an ounce on the back of Trump's tariff warning. HCL Tech to report its Q2 FY26 numbers today. CNBC TV 18 poll suggests dollar revenue to rise 1.8% on a quarterly basis. Profit after tax seen up 11.3% sequentially. The shares of India's largest IPO, Tata Capital, will be listing on the exchanges today. The IPO saw overall subscription of 2 times compared to the total shares on offer. Hello, good morning. You've tuned into CNBC TV 18. You're watching Power Breakfast with me, Vinny Motiwala. Thank you so much for tuning in as always. And it's always an exciting weekend since Trump has come into power. So yes, we had seen a lot of action that happened on Friday in terms of commentary. Then we moved on and changed in terms of the stance of commentary. But what's the indication from the Asian markets? That's what we'll start with, right? What is the Hang Seng indicating? Hang Seng is indicating as of now a red start is what Hang Seng is seeing. Taiwan index is down 2% as well. Japan, though, is on a holiday, so keep an eye out on that. But other than that, ASX 200, that's the Australian index, that's also trading in the red. And Shanghai is also trading with cuts of almost 1%. So overall, the cues in the Asian market are on the negative footing today. Nifty implied open, that is also indicating a red start for the Indian markets. Now it's down 85 points in as of now in terms of Nifty implied open. But that's what we're watching out for in terms of the indication from the Asian markets. But like I was mentioning, there's a lot that's happened on the global market front as well. And how is that going to be impacting our Indian markets is going to be important to watch out for, right? So we're going to be setting you up for trade, and we have our team of research joining in with us for just that. So before I go to them, let me set you all up for today's market action that we're keeping an eye out on. And like I was talking about, there's a lot of commentary that came in from Trump, right? So because of that, on Friday, what we saw, that US markets first saw a very sharp fall coming in, because what Trump said that yes, maybe that US-China trade war, that's back on the forefront. That was what we're keeping an eye out on. Then again, we got commentary coming in yesterday where Trump said that don't worry about China, it will all be fine. So again, what we're seeing now in terms of US market, the stock futures, that saw a rebound coming in after that, after Friday's fall in terms of trading session. Now for Indian markets, FIIs were buyers for the 4th straight session even on Friday. So that is something exciting that we're keeping an eye out on. Is that going to be continuing this week as well? Will be key to watch out for. FIIs were buyers of 459 crores. DIs were buyers of around 1,700 crores on Friday. Now, other than that, cues that we're keeping an eye out on. We have CPI data that will be coming out today. Keep an eye out on that. Vodafone Idea, that should be the one on your radar as well, because Supreme Court is going to be hearing Vodafone Idea's AGR dues. So that is something that we'll see a reaction to. Other than that, earnings reaction, right? Today, we'll have Anand Rathi Wealth, HCL Tech, Just Dial, which will be reporting their numbers. And companies that reported their numbers over the weekend or post-market hours on Friday, Avenue Supermart, Wari Renewables, are some of the ones that we'll be keeping an eye out on in terms of reaction. Do not forget, in Friday's trading session, Nifty gained for the second consecutive day. It closed near the 25,300 mark. So keep an eye out on that. As of now, a dull start is what we're watching out for in terms of the Nifty implied open. Like I mentioned, it's down almost 85 points. So will be key to watch out for whether this actually comes back to the green side, given the change in stance of commentary from Trump and a lot of earnings that are coming in as well. But let's move on and talk about other individual stocks that are going to be in focus in today's trading session. We have Gaurav for that. Good morning, Gaurav.
Well, let's talk about Phoenix Mills, because the business update has come for second quarter. Retail consumption, that is up almost by 13%, while on the other hand, gross residential sales was at 139 crores. Other than that, Signature Global, here also we saw second quarter's update. It was a bit weak because pre-sales that declined almost by 28%, while area sold by the company declined almost by 44% on a year-on-year basis. Even collections remained flat, up just by 2% on a year-on-year basis. Waaree Renewables came up with the results. Now, we saw net profit almost doubled, almost to around 116 crores, and at the same time, margins also expanded to 20% versus what it was at 13.6%. DMart, on the other hand, came with inline set of numbers, we could say, because net profit that increased just by 3.9%, while margins that declined almost by 30 basis points. Let's also talk about CAMS, because board has now approved stock split in the ratio of 1:5. Hindustan Construction, this company recently won an order worth 204 crores. Mahindra Lifespace. Now, two updates we have for the company. First is that company has acquired a land in Pune worth 3,500 crores, and they have also won a redevelopment project worth with a gross development value of more than 800 crores. Lastly, let's also not forget about Lupin, because US FDA concluded its inspection at one of the facilities in USA, and they concluded with one observation. And lastly, let's also talk about Axis Bank, because RBI has now issued a letter of caution, and this is because of the KYC norms. So definitely watching out on all these counters in a day ahead today.
Absolutely, Gaurav. Thank you so much for that. But what are we watching out for in the world of FNO today? Sudarshan is joining in with us for that. Good morning, Sudarshan.
Good morning, Vinny. So it was a week of short covering last week we have seen, but today it would be a test of water after the global cues that we are getting. It's largely a weak global cues after the following Trump's tweets, then again tweets, and now today you are seeing all the Asian major indices are currently trading with cuts, and on the back of that, your GIFT Nifty is also indicating a start with cuts of almost 100 points. But if you take the cash flows on both in the futures as well as in the cash market, FIs continue to be on the buy side. On Friday also, we have seen that FI is buying more than rupees 1,700 crore. Also in the index futures too, they have bought more than rupees 815 crore. They have reduced short positions by almost 4,700 contracts. Now their long exposure has seen a minor increase to 8%. But look at the options data. The major action on the call side was seen in 25,450 and 25,200. Both these call options have seen an increase in the open interest and also at the same time an increase in the premium. On the put side, 25,300 put has seen maximum addition followed by 25,250. So for support for Nifty remains around 25,150 to 25,200. Resistance would be 25,350 to 25,450. As far as Nifty Bank is concerned, support would be 56,200 and resistance would be 57,000. One stock that remains in the band is RBL Bank. One stock has entered into the band is Saman Capital, and some of the stocks that had seen fresh longs in Friday's session were Divi's and Yes Bank, and one stock after earnings that has seen fresh short was Tata Elxsi.
Okay, Sudarshan, thank you so much for that. We'll keep an eye out on those stocks in the world of FNO as well. Thanks for that. But on that note, we're going to actually slip into a very short break. Up next, we'll get you updates from the White House from over the weekend in our special segment, Trump Watch. Welcome back to Power Breakfast on CNBC TV 18. Now, getting you those latest updates related to Trump developments, we have Dia joining in with us in a special segment, Trump Watch. Dia, over to you.
Starting off with a dramatic statement aboard Air Force One, U.S. President Trump declared that the war is over in Gaza. The announcement came as Trump departed on what he called a very special peace mission to Israel and Egypt. The visit follows a ceasefire and hostage release agreement between Israel and Hamas, one Trump described as fragile but holding. Officials say the U.S. president hopes to solidify peace terms during his high-stakes regional talks this week. With regard to U.S. and China, trade discussions are once again in focus. China has warned the U.S. to back off its threats of higher tariffs and urged renewed dialogue instead. Beijing's Commerce Ministry said it will not hesitate to retaliate if Washington persists with its new trade measures. In response, the U.S. has signaled a willingness to renew cooperation with China. Trump and Vice President J.D. Vance indicated that Washington is open to exploring a potential trade deal. Vance urged Beijing to choose the path of reason, while Trump struck a more conciliatory tone, saying the U.S. wants to help China, not hurt it. Meanwhile, remarks that could shape the war in Eastern Europe, Trump said he may consider arming Ukraine with long-range Tomahawk missiles, weapons capable of striking deep inside the Russian territory. But he added that he may first speak with Vladimir Putin in what he called an effort to end the war, not escalate it. Trump also added that he recently discussed advanced weaponry with Ukrainian President Zelensky over the weekend, and in New Delhi, a new reset in trade ties between India and the US. Newly appointed US Ambassador Sergio Gore met PM Modi in his first official engagement since assuming office. The talks centered on trade, defense, and critical minerals, with both sides expressing optimism about deepening strategic and economic ties. That's all for today. Now back to you, Vinny.
Thank you so much for that, Dia. And talking about the US markets, Wall Street ended with major cuts as Trump announced additional 100% tariff on China, saying that the country became very hostile with its restrictions on rare earth metals. We have CNBC's Bertha Coombs, who's getting us a wrap on what happened on Wall Street.
U.S. markets were down sharply across the major indexes in Friday trading, following social media posts from President Trump escalating the trade war with China. The Dow tumbling 879 points, the S&P 500 falling 183, and the tech-heavy Nasdaq slipping 820. Stocks fell sharply after the president posted on Truth Social Friday morning, escalating that trade war with China, the president threatening to slap a massive increase of tariffs on China over its policy limiting the exports of rare earth minerals, which are crucial components for everything from weapons platforms to consumer electronics. President Trump accused Beijing of holding the world captive over the metals. However, rare earth stocks surged on that threat, with several of the major players up at least 10% during the session. The mass firing of federal workers has begun. The White House Budget Office saying Friday that the layoffs during the government shutdown have begun as the administration tries to put more pressure on Democratic lawmakers to end the impasse. The Budget Office said the reductions are, quote, substantial, but did not provide any more details. Several agencies across the federal government confirmed that layoff notices have gone out to thousands of employees.
Thanks so much for that. But let's talk about the U.S. stock futures. They rebounded from Friday's sell-off after President Donald Trump said trade relations with China will all be fine. The Dow futures are up over 0.8%, while the Nasdaq and S&P 500 futures rise well over 1% on the back of U.S. President's assurance coming in there. So surely will be interesting to watch out for where we are headed in terms of our trading session. But on that note, we're going to slip into a very short break. Up next, we'll get you the cues in the world of commodities. Stay tuned in for that. Welcome back to Power Breakfast on CNBC TV 18. Today also we have important earnings that are coming in. HCL Tech will be reporting their Q2 numbers. What is the expectation this time? We have Reema joining in with us to give us those details. Good morning, Reema.
Hi, good morning. So expect growth from HCL Tech this time. Dollar revenue growth seen up 1.8%. Constant currency revenue growth seen up 1.5% on a quarter-on-quarter basis. The company had indicated that growth will come back in Q2. So they've sort of signaled that the demand outlook is a lot more positive in Q2 given the healthy deal pipeline. There was strong demand seen in the BFSI vertical. Margins are also likely to see an uptick to 17.1%, and that will drive a bottom line jump of about 11%. The margin will be driven by the INR tailwind, but what the street will track very closely will be any restructuring related impact. They had indicated that, but does that hurt? In terms of the full year guidance, the current guidance stands at 3 to 5%, likely to be maintained, and the EBIT margin guidance stands at 17 to 19%. Deal wins for the company are also likely to improve on a sequential basis because in the prior quarter, there were 2 deal wins which got deferred from Q1 to Q2. So last quarter was $1.8 billion. This quarter, analysts are working with $2 to $2.5 billion. So that's the broad expectations. But let's see if, but in the case of TCS, you remember they made some announcements about participating in the entire AI ecosystem, the data center place. So let's see whether we get some out of syllabus, statements from the company this time.
Absolutely, Reema. Thank you so much for that. We'll be keeping an eye out on any important statements that come in from the management. But on to some fresh developments now, and this is on the Tata Trust story. Sources close to the Tata Group tell us that Tata Trust is now divided on keeping Tata Sons private. Parikshit is joining in with us to give us more details on this front.
Tata Trust, which owns a 66% stake in Tata Sons, has long believed that Tata Sons should remain a privately owned entity. However, due to recent tensions among trustees of Tata Trust, there is now a feeling that perhaps it's better to get publicly listed. Sources close to the Tata Group have told CNBC TV 18 that some sections of the Tata trustees now believe that due to the rift between the trustees and also the removal of nominee director Vijay Seng, it is important to consider a public listing and also go by the RBI directors. This, they feel, is in the sake of transparency and public accountability. Sources are telling CNBC TV 18 that a section of the trustees actually agrees with the Shapoorji Pallonji Group's statement, which said that it is now important to call for the public listing of Tata Sons in light of the recent developments. Now, the Shapoorji Pallonji Group owns an 18% stake in Tata Sons. This issue was not taken up in the board meeting that took place on October 10. None of the contentious issues were taken up. But it is very important to remember that just a few months back, all trustees of the Tata Trust had unanimously passed a resolution that Tata Sons should remain private. Now, the Tata Trust seems to be divided over the issue, and some believe that it is very important to go by the RBI's mandate and regulatory framework as well. Let's see what happens in the days to come.
Okay, Parikshit, thank you so much for that. But we have Manisha now who's joining in with us to tell us what's happening in the world of commodities this morning. Good morning, Manisha. What are we keeping an eye out on? Gold, crude, silver? What's the key today?
Well, it all depends upon the U.S. president's statements. While we've seen a complete U-turn onto this one happening after threatening to impose an additional 100% tariffs on Chinese goods, he now says in a more conciliatory tone towards China that U.S. wants to help China and not hurt it. And this has led to most of these commodities really rebounding. So the crude oil prices, which fell 3 and 4% on Friday and hit a 5 and a 7-month lows for both the varieties, have seen nearly 2% of a gain coming in the Asian markets right now. The markets also will watch out for the ceasefire between Israel and Hamas, a third straight day on Sunday. So this could be yet another factor that could perhaps continue to put pressure on prices. We still are trading at below $60 a barrel for the WTI crude prices. The other thing to watch out for is copper. We saw 6% of decline on Friday. It's gained by more than 4% in Asian markets right now. Same is the case with gold and silver. Some bit of a buying coming back for both of these precious metals also. So you have silver trading above $50 an ounce and gold at $4,050 an ounce, not too far away from its all-time highs for both of these commodities here. Well, the strong physical demand in various countries, including India, delayed shipments, strong festival demand, very strong investment demand, premiums being traded in Indian markets, it's something that tells you the story clearly. And so gold and silver should be on your radar. Yet again, we are looking at very strong gains continuing in Asian markets right now.
Okay, Manisha, I beg your pardon. Thank you so much for that, Manisha. But let's move on now and a quick revisit on the US-China story. The Chinese ministry looks at a response to the fresh US tariffs as more of retaliation than an ambush. CNBC's Evelyn Cheng is joining in with us with a report on that.
What's unfolded over the weekend is this debate over was the latest Chinese actions, were they retaliation or escalation? And China, most recently from the Ministry of Commerce, is definitely trying to emphasize that it is not escalation, it is retaliation, primarily to some of the new U.S. rules that were announced in late September, just before China started its 8-day Golden Week holiday. But when we have the new kinds of negotiating tactics from U.S. President Donald Trump, I think there's more and more questions about what retaliation to that might exactly look like. Because the latest from China, especially in terms of rare earths, is really establishing a framework for China to have more control over the rare earths sector and build on its leverage that it has over the supply chain. One Chinese think tank expert who studies the U.S., he told me that one important point to note is that China is still trying to balance, they want to do business with companies they perceive as being friendly to China, but they also want to have the ability to restrict the flow of these key minerals or other sorts of inputs to these Chinese these companies that might not be as friendly to China. And so, it's interesting, we see the Vice Premier He Feng still playing up how they want to have more of this engagement for foreign companies and foreign investment. But again, this Chinese researchers emphasizing that China knows what's going up with the U.S.-China relations. A meeting maybe later this month between the presidents won't change anything, and it's just going to be much more back and forth from here.
Okay, and with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. As of now, Nifty implied open still indicating a red start for the Indian market, so keep an eye out on that. Up next, our Bazaar Morning Call to take you through all that action.